This is a very casual chat, and we have some questions from the audience. If you feel like you have something to contribute with, you just physically raise your hand. I can see all of you, and then I'll give you the word, and that way we can try and avoid everybody speaking on top of each other. Yeah. So the first topic we'll go into is regarding USDT. And the question is, what if there is a liquidity crunch one day? They will not be able to peg one-to-one, will they? So any comments here? Yes, Ani, please take the stage.
No, exactly. I mean, I think not all stable coins are, you know, what can I say, like as trustworthy as the other. I would say, especially in like Tether, you know, it's not pegged one-to-one to anything. It has a collateral that is kind of made out of different things, even crypto. So if the underlying assets go away, then of course they will not be able to redeem anything. So that's why, like for us, we are an EMI, which is kind of the closest thing to a central bank as you can get. We are regulated. We need to have it pegged one-to-one, whether it's the euro or the dollar or sterling. So yeah, I think it's very important that, you know, when investors are using stablecoins or crypto, that they know, you know, what the underlying assets are, and kind of, if, you know, can you trust the parties to actually safeguard your funds or not?
Okay. Anyone has something to contribute to that?
Sorry, man. Oh, Andrew, go ahead.
Yeah, Andrew first, and then Solo.
Thank you very much. Yeah, I was just going to say, this is pretty much what I was chatting about before with USDC versus USDT. You know, you do want to make sure that you get as close as you can as one-to-one in terms of the reserves they have. I think Paxos even has up to 90% these days. But again, there's, you know, the liquidity is not as deep on their side as it is USDC, so there's a bit of give and take. But yeah, I think, you know, if you are going to participate in the stablecoin market, do your research and make sure you understand what you're getting into. And, you know, in the case that there is a sort of run on those markets, that they can actually back that up with what they have in their reserves.
Very nice. Solo, you want to contribute to that?
No, just a question really for Andrew and Arnie. I think, you know, it's one thing to peg a stable coin to a currency, but if coming out of COVID and all these central governments printing cash, right, to try and fight the COVID crisis, you know, so the inherent value of each dollar is weaker than it was, call it 3 years ago. How does that get mitigated as we move forward? So you've got an underlying currency that is pegged one-to-one, but the currency itself is devaluing. How do you mitigate that?
I mean, it's like for us, for example, if we issue €1 million, we have it safeguarded in euros. So €1 is always €1, right? You know, even though the euro will, you know, get weaker or whatever, it will still, you will still have the same, you know, asset backed, and you would always be able to redeem one-on-one, one-to-one. And we actually have more than one-to-one. We have 102% actually that we need to safeguard. Yeah.
Okay.
Yeah. Thank you again.
Yeah, just to add on to it, I think, you know, with sort of inflation playing a role in this, there's a few things you can do, and you do see people, if they are looking to hold their stable coins for long term, you know, they end up lending it out on sites like Nexo and maybe, you know, Celsius, and they get a return on it, which might sort of hedge against that. But a lot of the time I see stable coins being used for sort of day-to-day trading, not really long-term holding. If you are trying to hedge against that inflation, you know, there's Bitcoin, and there's like Paxos or Tether Gold, if that's, you know, your cup of tea, but there's a few other options there available to you.
I'd like to add also that, I mean, for Monerium, like we are all kind of crypto friendly. We were early into crypto. We think it's amazing, and the blockchain technology in whole, and other stable coins also. And I think it's like in the examples that I gave there, we have like a decentralized exchange like Uniswap, which makes it easier for everybody also to, okay, if you have the Monerium Euro, you can go to the USDC, which is, I think, considerably better than USDT. But then you can kind of swap these kind of two with USDC and Euro, and even better if you have both, you can put those funds into a liquidity pool like Uniswap and earn interest there. And so I think like what we're heading towards is not going to be one stable coin for all or money or whatever. It's going to be this kind of homogeneous system where you can trade and exchange everything instantly, and it's quite beautiful.
Yes, Mark?
And if I can just add to that, the beauty of crypto in general, I think, is that suddenly governments don't have a monopoly on issuing money to a large extent. But I think to answer your question, Solo, is these currencies, these stablecoins, are a medium of exchange, right? So a medium going from one thing to another. Of course, you can choose to hold stablecoins. I would encourage to deposit into something that generates yield, like Nexo and Celsius that you mentioned, Andrew. But again, it's a medium of exchange, moving to, for example, let's say, top of my head, real estate, let's say, with the DigiShares. Yeah, so I think that's important to notice or underline when it comes to stablecoins.
Any further comments?
One more comment, just that, I think just to kind of also said, like, as long as we're paying taxes in euros or dollars, we will have fiat. That's basically, so there will always be a need to have a good on and off ramp. And that's what we're trying to have it as instant and as frictionless as possible without, more intermediaries.
Yeah. I see everybody agrees. Speaking on tax, there is a question. What are your thoughts on taxability on the trading of stable coins? Anyone here is a tax expert that wants to answer? No, people are shaking their heads. I think also.
I can
Yes,
give a comment on that. El Salvador just made Bitcoin legal tender, right? So
Yes.
if you ask me from a personal perspective, I think other governments should follow suit. That would solve the issue more or less permanently, because then you will be able to pay your taxes in crypto. But while that's not the case all over the world, I think you should just tax it just like any other sort of capital gains. In Denmark, in particular, we have a very, very weird taxation on crypto. It's a very defensive way of regulating, if you ask me. But yeah, I think the ultimate solution is to make it legal tender, like El Salvador.
Very good.
I have
Yeah,
one comment there, like, because we are working with a lot of great partners like DigiShares, and we're also working with a company called Request, which is making like invoices, like self-settling invoices. So Matt, if you owe me 100 euros or whatever, I can send you an invoice and say, okay, this is my blockchain address, and the invoice itself can automatically settle the invoice. So there is no need for an extra payment system somewhere else, or Visa or whatever, to settle that. But the amazing thing also is that these invoices, because they're smart contracts, that you can pay in whatever you want to pay. Like you can pay in DAI or USDC or in crypto, and the invoice will automatically convert that to euros or whatever I want to get paid in, so I get paid in. And the other thing that you can kind of build on top of that is kind of, if you wanted to kind of pay taxes in real time or whatever, and when governments will be there in, I don't know, 10 or 20 years, we could also have like, paying taxes in crypto or whatever completely automatically. And you can have any assets like real estate or crypto or money or whatever that get automatically converted into whatever currency the government will take, and you will pay your taxes in that. So I love this kind of, this robots will pay taxes soon from Sergey or whatever in the comments. I think that is actually what's going to be happening. Like there's robots who just paying your taxes in whatever assets you hold in your wallet.
Very nice. Any further comments on the taxing? No. Next question. There are several parts to this question. So first, who is creating the market space for tokenized real estate transactions, i.e., how is liquidity created and maintained? And part two of this question is, how, with fractionalized assets, are decisions decision rights handles, especially with retail investors investing small amounts into real estate?
Yeah, maybe I should take that, because that's exactly what we are working on within realestate.exchange. So we intend to tap into or use existing liquidity pools, DEXs, AMMs. I don't think we can disclose right now, but tell me if I'm wrong, Klaus, who we are partnering with. But they are a major DEX in Ethereum, so that gives you a handful of options. How is liquidity created? Some of these DEXs have really innovated on the whole issuance of tokens, doing fair launches and fair distributions. We can send articles on that, how they do that, but it's basically a curve where you start with a high token price on real estate, and then or any token, and then it moves down. The reason for doing that is so trading bots cannot front run and sort of bid against human traders, if you will. Obviously, security tokens in general, real estate in particular, is very different from regular tokens that are free floating, because you have an underlying asset with a certain price. Let's say book value, that the token price cannot go below that. Otherwise, you can buy up the building for cheap. There's a lot of regulation around this that I'm certainly not an expert on, but there are some properties with this that are a bit different that you have to take into account. Obviously, KYC and AML, if you want to buy real estate or securities, we have to know who you are. So it has to be a whitelisted wallet. So there are certain properties that makes it more challenging, but those are technical challenges that smart people are working on, and they will be solved soon enough.
Okay, very good. Does anyone yeah, Klaus?
Yeah, me. I just want to add also that we are working with T0 and other exchanges as well, so they can certainly provide liquidity, and we have an integration with more of these exchanges, especially T0, where we just announced the project today. We'll be closely integrated with them, and they can definitely, as a regulated exchange, they can provide liquidity as well.
Yeah. Okay, then I think we're moving on to the next question. How does investors get the guarantee that the real estate token they hold is equivalent to the actual physical property or share of that property? What is the legal framework?
Maybe Klaus is the best one to answer.
I was thinking
yeah, maybe. So it's done differently from country to country, but generally what we do is that the token itself is linked to something like a share certificate. So what we typically tokenize is a share of the company that owns the property or the development project, and the token itself corresponds to a share then, or a collection of shares, and the token has the capability of having a link to a web page that basically corresponds to the share certificate. It is password protected, so only the investor can see it. So that's the link from the token to the legal side, you could say. And then also I would say when the legal unit is created that needs to be tokenized, it needs to be written into the bylaws that shares can be issued as tokens and so on. And that's sort of the basics, I would say. Then there's a good guarantee that the token itself will link to the share and to the property. And of course, the platform that we provide and other companies in the industry will maintain the share cap table and make sure that it's always 100% updated based on any transfer that is made with the token itself. So that's a short answer to that, but it is quite complicated, I would say, in many countries to ensure this.
Yes, very nice. Anyone has further comments for that? No? Okay, next one. What are your views on the future of stablecoins amid the growing central bank digital currencies? Yes, Andrew?
Yeah, I think I could answer that question over the course of an entire hour, but I think to keep it short and sweet, I think it'll play out in a couple of different ways. You know, you see what China's response has been, you know, banning Bitcoin for the third or fourth time, and arguably to remove any competition in the space for when they have their full CBDC launched. You know, you might see some similar things happening in the space in the US or in Nordic countries where they're also in beta testing for this sort of thing. But then again, you might see the rise of algorithmic stablecoins, like I mentioned before, decentralized stablecoins coming to the space, where maybe more centralized ones won't be able to operate as freely as they are now. So it'll be, I think it's quite an interesting question, especially considering the following question about you know, the future of DeFi. And I think that all relates to KYC and AML regulation and sort of what they have to adhere to. But yeah, it's really hard to tell at the moment without any clarity from regulators.
Very nice. There is what I believe is a follow-up question to that, and that is, how do you envisage the future of DeFi after the launch of CBDCs? Andrew?
I think, yeah, sorry.
Oh yeah, Arnie?
Yeah, okay. I think with CBDCs and everything, I mean, I think like with everything right now, everybody's kind of exploring and talking maybe what will happen, you know, with CBDCs. Is it going to be, you know, central banks will be kind of, will they be issuing the money? Will they be doing the consumer front of it? Like, will that happen? Will they actually be driving the technology and innovation? I don't really see that kind of happening. And we just need to kind of see how everything kind of plays out, and kind of what they were saying also in regards to kind of DeFi. Everything is in a little bit of a gray area right now, and I think regulators are kind of taking it seriously now and just trying to figure out what these things are. Like when you have a decentralized exchange, who has the license and who's doing what, and kind of, is there any intermediaries there? And, you know, I think there are going to be new licenses, and then they're going to try to retrofit something to old licenses. And it's going to be very interesting to see how it kind of plays out, especially with Monerium. We're working, like I said, with the regulators, and, you know, and regards to CBDC, we're kind of having a close look on that also.
Okay, and then there is a question directly for you, Arnie, and that is USD or other fiat in the pipeline for Monerium?
Yeah. So we have actually issued dollars and pounds. So we are a kind of relatively new company, and believe me, if you think blockchains are difficult and complex, wait until you see under the kind of banking hood and see what's under there. So we really kind of are focusing on Europe first and the Euro, and really kind of solving that problem, having that kind of instant on and off ramp, and with a bank account in your own name that is directly connected to your wallet address. We'll see probably more currencies next year. We're of course focusing on dollars and pounds, and maybe even other currencies. We'll just need to see kind of where our partners are going, and platforms and blockchains, and kind of what's happening. And but right now we're focusing on the Euro for the remainder of this year. But we have a license to issue dollars and pounds, and we also have a license that can be passported into other jurisdictions like the US or Asia or whatever.
Very nice, very nice. And then we have one final question for today, and that is directly to Solo. What do you foresee as the biggest obstacle in Africa adopting a stablecoin, as opposed to individual African countries adopting their own?
Yeah, thank you for that question, Wade. I think the biggest obstacle, you know, certainly for me, is the departure point, right? So, you know, what's the single point of truth, or the universal truth that each one of these countries would kind of all agree on? And so I think for me, it really boils down to, you know, things like a commodity backed type, you know, stable coin probably brings us closer to a uniform coin that can be deployed across the continent, as opposed to, you know, one for South Africa and one for Botswana, as an example. And so that single point of truth that everybody agrees with is probably the biggest obstacle, purely because whatever their point of truth is informed by whatever their biases are and whatever agenda they're trying to push, right? So I think that becomes the challenge.
Very good and clear answer. Thank you very much for participating. For everybody who's joining us today, this recording will be out to you and sent to you, so you will be able to see it again. We will also try and collect the slides from those speakers who are willing to hand them over. We cannot guarantee anything, but we will try. And then we'll see you all again in a month. Thank you to all of our speakers. That was great. Thank you for joining.